Hey traders, welcome back to this week's weekly Forex forecast. Last week we started to see Forex markets moving again after a slow few weeks, and we started to see opportunities coming back in, which was fantastic. It was another winning week in the GMT members area with the real-time setups, but on Friday, yesterday, something very important happened in terms of Forex, stocks, and also bonds in the US. What happened? Of course, we got the ratings downgrade, the credit rating downgrade for the US from Moody's. Now, this is important because Moody's is now the third credit ratings agency out of the big three, and all three of them now have downgraded the US credit rating from the top-notch rating to just one below, in this case from AAA to AA1. Now, what does this mean? Well, if you think about it, this is already seeing bond futures dropping because bonds are essentially less valuable than they were when the US had a high credit rating. So if bonds are less valuable and people are selling them, this is also negative for stocks. It's going to have a downward pressure or downward effect on stocks. And at the same time, as yields go up, we're not going to see the dollar necessarily going up straight away because the US dollar itself is going to be in supply. In other words, when people are selling bonds, if they're foreign owners of bonds, they're going to be selling their bonds, which are denominated in dollars, and they're going to be repatriating the currency into their own domestic currency. So this is net negative for the dollar, but I'm not sure we're going to see a massive sell-off in the dollar. We may end up just having an initial sell-off, and that could potentially reverse, could be something to watch out for. However, going into next week, just for the next 5 trading days, I would rather focus on the non-US dollar pairs and also focus to the long side some of those currencies within the DXY, so the dollar index, which stand to benefit from a weaker dollar. So that would be euro to the upside, Swiss franc to the upside, etc. And we're going to look at that all in the portfolio selection. So having a quick look at euro dollar first of all, of course, we got that negative news for stocks, bonds, and also on balance, if not, severely, but at least a little bit negative for the US dollar. So if we get, straight out of the gate on Monday, dollar weakness, that's going to push euro dollar most likely to the upside and probably above its upper bound. Now, the thing with euro dollar is it is a buy or do nothing. So I do think there are better markets next week, and we're going to be looking at those in today's video. However, because on a weekly rolling basis, this market is still overbought or overextended. And of course, we got this data back over here that this market was likely over a number of weeks, because we're looking at this in the weekly time frame. Of course, this is the same on the monthly and the daily in HedgeDash, but the data came in, the signal came in on the weekly basis. So that still hasn't washed out. It means any push to the upside, whilst euro dollar can move higher, it should be struggling, should be limited. So there is an opportunity here, perhaps Monday evening into Tuesday, to start to look for a reversal to the downside, even though this is slightly bullish, because you can still look at this as needing to correct on a higher time frame. So if I drop down to the 4-hour chart, again, I do think there are better markets to be trading next week. There are markets and pairs higher up on my watch list, which we'll look at. But if we get that initial dollar weakness and we start to trade above the 1.12794, so we enter the sell zone, and of course this is the buy zone. But if we enter the sell zone above the 1.12794, this is where I'd begin to look. Probably, at least Monday evening. If you do push higher, at least let Monday kind of move out the way and see if that fades, into Tuesday. And I would be looking for that potential reversal, back inside the range. So one of the things to pay attention to is back in 2011 and in 2023, when we had the other 2 ratings downgrades for the US, we did see a little bit of initial weakness in the dollar, certainly in 2011. 2023, not really. So I do think any kind of weakness in the dollar is probably going to be short-lived. Now, it's not 2011 anymore. It's not even 2023, although that was, not that long ago. So we could have a slightly different reaction, but I do think any weakness in the dollar probably, on balance, starts to fade within a fairly short period of time. So that's what I'd be looking for. If we did end up above the 1.1397, this is where we become extremely overbought during the week, so intra-week, so overbought above the blue range and extremely overbought above the gold range. This would be the second place I would be looking, and we saw this last week actually in gold. Gold came all the way down to its second lower bound, and then it bounced from here. Big rally from its second lower bound last week. So this would be the second place I could look for a potential short opportunity. Intra-week, I would leave this. Really, I just want to be looking for those reversals in euro dollar. But I do think there are better pairs to be trading next week, as we're going to see in today's video, outside of the dollar pairs. Okay, so looking at the portfolio selection coming into this week, markets generally in Forex are kind of choppy, and we have more clarity to the downside really than the upside here. So I do prefer New Zealand shorts as one of my top themes. We then have the yen, the Aussie, and the CAD essentially as the next three currencies we could look at to the downside. However, because we've just had on Friday a bearish catalyst on the dollar, I don't necessarily think it's going to be severe, but we don't know for sure. We're just kind of assuming or, making a prediction that it might not be that severe. But it doesn't mean we have to jump in and suddenly try and, take the other direction in those markets in the US dollar pairs. So what I would prefer to do is try and trade what's already here in the quantitative data as being good to the long side or the short side, but also lining up with dollar weakness as well. So if we don't get dollar weakness, it doesn't really matter because those pairs are good to the long side and the short side anyway. And if we do get dollar weakness, then it should just accelerate those opportunities in those pairs. So I do like New Zealand to the downside. The US dollar yen has been, this kind of dynamic where we've seen money going into the US dollar and it's been coming out of the yen. So that pair, US dollar yen, I do think, if we're going to get weakness, we could actually see this benefit the yen. So although this is one of the top shorts going into this week, because of the ratings downgrade and because there's a little bit of uncertainty, look, how much of an impact will this have on the dollar? Because the dollar is already kind of weak or has been weak recently. I would prefer just not to short the yen, at least until I've had a look for a couple of days next week to see what's going on. So I will be looking to short the Aussie instead to the short side and also the Canadian dollar. So essentially I'm looking at the commodity currencies. So if the dollar goes down, we tend to see the Japanese yen benefiting, but also within the dollar index, the euro and the pound, kind of the Swiss franc as well. So alongside shorting commodity currencies going into next week, I am going to be looking at the pound to the upside. We're going to skip the US dollar to the upside essentially for the same reasons we're skipping the yen to the downside. In other words, if the dollar sells off because of this, we've got a bearish catalyst, we should see the yen going higher. So for that reason, I'm going to be primarily focused on euro longs and also Swiss franc longs. So to cut a long story short, I'm going to be looking at primarily next week pound New Zealand to the upside, pound Aussie to the upside, pound CAD to the upside. I'm also going to be interested in euro New Zealand to the upside, euro Aussie to the upside, euro CAD to the upside. And also going to be looking at New Zealand franc to the downside, Aussie franc to the downside, and CAD franc to the downside. Just bear in mind, on Tuesday, we have the RBA, an interest rate decision out of Australia. So when we go through the Aussie pairs, and we look at the Aussie pairs now, I'm going to be looking at trading those after the RBA on Tuesday morning, not before. Okay, so kicking off the watch list with crude oil as we always do, and in previous videos I have highlighted this big descending triangle pattern. I'm not going to keep highlighting the same thing in every video, but this descending triangle pattern, you can just see the tip of it and the underside of it. We've broken out, we're kind of down here. So this pattern is projecting to the downside at least, roughly $45. So it's a pretty easy setup in crude oil for the time being. Every time this market pushes higher, I'm looking to sell it. Every time this market pushes higher, I'm looking to sell it. This week, if we can get crude oil pushing above the 66.06, this is where we turn overbought during the week. So if we have a market which is a short or do nothing, in other words, I can either sell crude oil or do nothing with it. I can't buy it. If we have this and we trade into the 66.06 and above it, and potentially even the underside of the descending triangle pattern, 67.81, anywhere in this area, because I look left and I don't see any kind of significant highs over here until here. So because of the volatility here, it's just kind of air. So if we do push through here, especially if we push through and trade into 67.81, or if we start to form, head and shoulders patterns, double top patterns, then I'm going to be looking for that 1 or 2 day reversal back inside the range. If for whatever reason we blast all the way through and end up above the 69.64, I don't anticipate this happening. Again, you need some kind of catalyst usually. But if we do see that, I would be interested in a potential short position as well. It's the second place I can pull the trigger on a short position, whether I'm short already or not. And the third and final setup, as always, is you can look, especially in the commodities, because breakout trading tends to work better in commodities and Forex. But if you start to trade up towards the upper bound and you get momentum to the downside, you can look for that bear flag pattern into the moving average, and then sell off, in this case, down to the profit taking target at the 58.91. Kicking off the Forex universe with Pound New Zealand. This is a market I can only be long or do nothing. What I want to see is this market turn oversold during the week. It does that by trading below the 2.23448, entering the buy zone. And you can see immediately, if you look to your left, there's a really nice support level just here. So right there, and in fact, I don't see really anything else until we get down to here. So right there is going to be the place next week. If we can come down and turn oversold on this market, I'm going to start to look for sellers to get trapped. They start to try and push the position through, and as they lose faith in the position, they pull their shorts and you get a short covering rally. That's a liquidation I'm going to be looking for going into next week, and I'm going to be looking to capture 1 to 2 days worth of movement out of this market. If we end up below the 2.21149, again, it's kind of a backup level because 95% of the time you're not going to see markets trading into these levels essentially. But if we do trade down here for whatever reason, and I could already be long from over here, whether I'm long already or not, I can pull the trigger on a long position either for the first or second time if we trade down below the 2.21149. And the third and final thing is you get the break down below the moving average and then the re-break, and you can look for that bull flag setup intra-week into the profit taking target to the upside, which is the start of the sell zone, but I can only buy this market or do nothing. So the sell zone for me would just be a profit taking zone. And that's currently sitting at the 2.2804. Next is Pound Aussie. Now I'm going to be looking at this from Tuesday onwards. We're expecting an interest rate cut out of Australia, which on balance should be, all things considered, negative for the Aussie. What I'm going to be looking for is the following. If we get a kind of a neutral outcome, in other words, we get a rate cut, it's kind of bearish for the Aussie dollar, but not too much happens, then I'll just be simply looking as if there were no rate cut or no interest rate decision at all. And this kind of meanders to the side. I'll be looking for the market to pull back, trade below the 2.05257. And once we enter the buy zone, I will start to look. There's a really nice low there, nice low there, nice low there. So in this area, once we start trading to this low, I'm going to look at it. Do we start to reverse from here, or do we trade straight through and hit these levels? If we trade through and hit these levels, I'm going to start to look. Are we lacking momentum? Are we seeing bullish reversal patterns? If so, I'm going to be looking for that 1 or 2 day liquidation back inside the range. If we end up down below, the 2.0309, I can pull the trigger on a long position from down here as well. Now, why would that happen? Well, you'd probably need some kind of hawkish outcome. Maybe they're expecting a rate cut, they don't cut rates, and then they say they're going to even hold rates for longer than people are even expecting, right? And then you get a bullish rally in the Aussie dollar. Pound Aussie hits its second lower bound. You've got that bearish catalyst in this case. Well, it's a bullish catalyst for the Aussie, but it's a bearish catalyst for Pound Aussie to the downside. So in that scenario, I could still look at buying Pound Aussie because regardless of the outcome of the RBA, I can only buy this market. So this would be a scenario where we could see this, and it's what we're trying to do is we're trying to war game the different scenarios. So we have lots of different bases covered. And then when the actual event takes place, we can just pull off the shelf, what's the reaction, what's happening, and what's the play, for this. And the third and final thing, of course, is if this just goes sideways into Tuesday, which is likely, and then you get the momentum from the RBA itself because you get the rate cut and a bearish outcome, then you can look for the post kind of momentum rally, usually get one more rally into the upper bound here, profit taking target at the 2.0958. And the final pound pair is Pound CAD. I can either be a buyer or do nothing. I cannot sell this market. The lower bound sits, so the buy zone sits right at the 1.83857. And when we look left, there's a really nice low here. There's multiple lows over here as well. So this is a pretty solid area of support where if we can come down, take this out, I'm going to be looking for sellers to start to fail at this level. I'm going to be looking for that short covering rally, 1 or 2 day reversal back inside the range. If we end up down below the 1.82259 now in Pound Aussie, maybe you could see that, although I still think it's unlikely even in Pound Aussie with the RBA. But if we do end up down below the 1.82259, even though we don't have a catalyst next week, so it's unlikely, as a backup plan, this is the second place I could take a long position in Pound CAD, whether I'm long already or not. And the third and final thing is you can look for the intra-week breakout. So it just starts to flag and consolidate. And usually the moving average starts to point down, and then you get the breakout. And you'll probably be looking at that as like a trend line breakout. Then you can look for that pullback, bull flag set up into the profit taking zone at the 1.8705. Moving on to the euro pairs, starting with Euro New Zealand. Now I've moved this over to the right, this chart a little bit, because I want you to see all these lows over here, because this is what I'm going to be specifically looking at. If we can come down and we can enter the buy zone, in other words, turn oversold during the week in this market. So I can only be a buyer of this market, I cannot sell it. So what I want to see is, being only a buyer of this market, is I want to see it turn oversold during the week. I want it to trade down below the 1.87508. The odds of a reversal or this market even just pausing swing in my favor. And at the same time, looking left to look for confluence. Here's a nice low, here's a nice low, here's a nice low. What do I mean by a nice low specifically? I'm talking about price points in the past where we came down to, and then that caused the market to rally, or there was a rally to the upside from that level. So right there is the area I'm going to be looking at once we enter the sell zone, if we can enter this. And I'm going to be looking for sellers to start to lack momentum, pull their positions. I'm going to be looking for bullish reversal patterns. I'm going to be looking to capture 1 or 2 days back inside the range. If we end up below the 1.85224, this is the second place I can pull the trigger on a long position, whether I'm long already or not, even though I don't expect it to come down to here. If we do breach it, I can pull the trigger again on a long. And the third and final thing is, you start to trade down towards the lower bound. You get this kind of consolidation and you get the re-break. And in this case, you'd be looking at a bit of an inverse head and shoulders kind of between the range, wouldn't you, in that scenario? You get a re-break. You can look for the bull flag set up into the profit taking zone. And there's a nice high right here for confluence above the 1.92076. Next is EurAusd. Again, I can either be a buyer or do nothing. And we have the RBA on Tuesday. So I'm looking for weakness out of the Aussie, but if it's a non-event and we get the RBA coming out and really by the end of the day nothing has happened, then I'm just going to be treating this as if there were no interest rate decision. In other words, I want to see EurAusd come down, take out the lower bound. The next low is over here. So it's kind of halfway between this kind of buy zone that we're looking at here. We may get all the way down there. If we do, if we come straight down to it, that would be great. But we may start to stall out, and start to see momentum fading just below the lows which are being made next week before we even take this out. So anywhere between the 1.7223 and this low, I'm going to be looking for momentum to fade, for sellers to pull their positions. I'm going to be looking for this reversal back inside the range. If we get a bullish outcome from the RBA, we could, because it's an interest rate decision, see the market down below the 1.70118. This would be the second place. I could look for a long position. So essentially, think of it like this. They come out, they're expected to cut, and they hold rates. And you immediately see this market tanking. Well, you have to think, maybe I'm not going to step in and buy it below this level then, because, now we have a bullish catalyst for the Aussie. So kind of stepping in front of that bullish catalyst. So you can leave it, you can just wait and see, it goes straight through and you hit this. Now, even with a bullish catalyst, you can pull the trigger. So that's a scenario that has played out many times in the real-time setups with GMT members. I've left upper and lower bounds, and then jumped in at the second upper and lower bounds after, a catalyst on interest rate decision. So you can look for that, post RBA. And of course, if we get the weakness, so we get the rate cut and they start, saying they're going to have to cut rates, sooner than expected again in the future, we can get that bullish rally to the upside in this pair, which of course would be bearish Aussie, but bullish Euro versus the Aussie. And you can look for that bull flag set up, as the moving average follows it, into the profit taking zone next week, which is above the 1.76459. And the final euro pair is EurCad. I can either be a buyer or do nothing. I cannot sell this market. So what I want to see is EurCad turn oversold during the week, which is below the 1.54437. So think about this. We've got crude oil, which is bearish and weighing on the Canadian dollar. The Canadian dollar itself is fairly bearish, but for whatever reason, we see a little bit of strength in the CAD. And it pushes this market down below the 1.54437. That's a market I'm looking at and I'm saying this is most likely mispriced, right? We're not expecting CAD strength and yet we've got it. Therefore, I can take the other side of that position. So we trade down below the 1.54437, and these are the exact setups we're trading in real time with GMT members every single day throughout the week. And if we trade below the 1.54437, this is the low primarily, although there's another one down here, but this is the major low primarily, this is more of a spike, that I will be looking for. Can we see sellers attempting to break through here and starting to struggle? And if we do see that, I'm going to be looking for that liquidation as they cover their shorts, short covering rally for 1 or 2 days back inside the range. If we end up below the 1.52977, I don't expect this to happen, but just as a backup plan, that would be the second place I can pull the trigger on a long position. And the third and final thing, you start to break out intra-week because we're kind of grinding lower, and you can look for that moving average kind of pullback, bull flag set up into the profit taking zone at the 1.57355. Wrapping up the Forex universe with the franc pairs before we move on to gold and silver, starting with New Zealand franc. This is just short or do nothing for me. And we have a really nice prior high right at the sell zone. So if we can come back up, we kind of pushed higher, closed the gap, started to chop. If we can come back up, I'm going to be looking for the double top above this level. And I'm going to be looking for a 1 or 2 day liquidation back inside the range. This also happens to be the retest of this major breakout point here. So definitely interested in this setup next week. If we end up, for whatever reason, although it's not expected, above the 0.5067, so we start to trade outside of the gold range, then I can look for a short position as well, whether I'm short already or not. And the third and final thing is, if we start to break up towards this, but because we've already tested it, maybe we don't come all the way back, you can look for the bear flag setup, those of you who like Fibonacci, etc. You can look at that pullback and that sell-off. Usually get one of those in the 4-hour chart roughly in a given week. And you can look for that into the profit taking zone at 0.4853. But I can only sell this market or do nothing. I cannot buy this market next week. Next is Aussie franc. I can either short this market or do nothing regardless of what happens on the RBA. But I'm going to be waiting for the RBA to take place. If we get a neutral outcome or it's a nothing event, I'm just going to treat it as if there wasn't an event, which is I'm going to be looking for a short above the 0.54358. This is where we turn overbought during the week, and there's a really nice 4-hour high right here. So this is the kind of double top reversal I'll be looking at. Not just on here, I'll drop down to lower time frames and look for a double top within a double top even, or head and shoulders within this double top. But this is the prior high that I'll be looking for bulls to start to lose confidence in, trying to break through. And as they pull their positions, that's the liquidation back inside the range for 1 or 2 days. If we end up above the 0.55157, and this could happen because we have an interest rate decision, I could pull the trigger on a short position as well, whether I'm short already or not. And why would that happen? Aussie franc rally into the upside, we get an unexpected bullish outcome from the RBA. And the third and final thing, which is probably on balance, maybe the most likely, is we get the interest rate cut. You see Aussie franc starts to tank like this, and then the moving average follows it. And you get that pullback and that follow through setup down to the profit taking zone at 0.5276, a really nice low over here as well, which you could time any intra-week shorts on. And the final Swiss franc pair before we move on to gold and silver is, of course, CAD franc. I can only be a seller or do nothing. Another really nice high in the 4-hour chart right at the sell zone. If we blast through this and we don't look back, then this would be the next one up, but this is the primary one I'm going to be looking at. So I want to see CAD franc make an attempt higher, trade into the prior high, and this is where right into the sell zone I'm going to be looking for bulls to pull their positions for that liquidation back inside the range. If we end up above the 0.61294, we become extremely overbought during the week. I can pull the trigger on a short again if I'm already short, or I can pull the trigger on an initial short. This would be a great place to do that. And the third and final thing, you get the intra-week breakout, so you kind of make your way back towards the upper bound, but you don't get there because the market's just too weak, and you get that sell-off breaks down. Usually it's kind of a channel breakout, and the moving average, which is just like a kind of dynamic trend line, just sort of follows it, pulls back, you get that bear flag set up into the profit taking zone. Nice low down here as well as a target at the 0.59212. Okay, so wrapping up the video with gold and silver. Now, I have been saying for quite a while, I really want to be a buyer of gold from lower bounds and a seller of silver from upper bounds. I still have that bias going into this week, but we have finally started to see some real weakness coming into gold. We took out the lower bound last week. It was right here, the second lower bound. We traded into it, and this was the rally we got from the second lower bound. We dropped down, gapped down, hit the weekly first lower bound, had a little bit of a bounce. Then we dropped down, hit the second lower bound, and we had this rally. So we hit the first lower bound and bounced. Then we hit the second lower bound and bounced. And we actually bounced very strongly from the second lower bound. So going into this week, we are still seeing weakness in gold, but on balance, I don't really want to step in and short gold. We've just had a bearish catalyst potentially from the dollar. We'll see how bearish it is. I suspect not that much, but we will see. And so going into next week, I still don't really want to sell gold. So if we come down and take out the 3126.06, I will be looking for a potential long opportunity for 1 or 2 days back inside the range. If we come down like we did last week to the 3043.03, this is the second place I can pull the trigger on a long position if I so wish. And this is a really good example last week of how I often use the second upper or lower bounds to exit an initial position that isn't working. In other words, the market comes down, tests its first lower bound and starts to bounce. Now, let's say I'm involved in a long position from last week in gold here. I actually got involved somewhere down here and I scratched it for break even. But let's say I get involved down here, it bounces and it doesn't quite bounce enough and I'm still holding on to it, and then it comes to the second lower bound. If you'd bought there last week in gold at the second lower bound, as this bounces, you could have had this for a break even, just scratch the whole thing, right? Even though you had that initial losing position from the first upper bound or the first lower bound in this case. Does that make sense? So when I say to you guys, you know, a second place I can pull the trigger whether I'm long or not, this is why, because very often it hits the second lower bound, bounces strongly, and you can actually exit your first position if you're in a losing position for break even. I do that all the time with GMT members in real-time setups. So as we come down, if we start to make our way down and we get a bullish breakout, you can also look potentially for that bull flag setup into the profit taking zone at the 3292.13, and there is a gap over here which probably would be filled, you know, if we start to work our way to the upside. So that's why seeing gold, I am slightly bullish on balance. I don't think it's as good a buy as it was recently, but I would be interested to look at it to see if we could get some reversal patterns if we trade into the buy zone next week. And wrapping up the video, we have silver. Now, if both markets push into their upper bounds, so if they both push down into their lower bounds, I'll be looking to buy gold rather than silver. But if they both push into their upper bounds and they turn overbought during the week, so in this case above the 33.82, it would be silver, and there's a really nice high just here. It would be silver out of the two of them that I would prefer to look for short positions for 1 or 2 day liquidation back inside the range. If we end up above the 35.37, something significant has happened. Could that happen off of dollar weakness from the credit downgrade? Potentially, because it's a catalyst, it's a bearish dollar catalyst. I don't think it will, but it could. If that's the case, that would be the second place I could. I'm not sure I'd want to, because, you know, if it got up there, then I'd probably be looking saying something's happened here. We need to be careful about shorting this tool. But if it does trade above the 35.37, I can pull the trigger on a second position if I so wish, as per my process. And the third and final thing is, if we start to make our way towards the upper bound and you just get the breakdown back below the moving average, and the moving average follows it, and you want to see it with momentum. So not just, you know, not just a little bit of a break like this. You want to see something like this. It breaks through and kind of holds, you know, and then it kind of consolidates. You know, you want to see real momentum. If it's just chopping around it, then that's, you know, that's different. You want to see it kind of break right down, clear momentum, and then it should hold and flag. That would set up your bear flag setup into the profit taking target next week at the 30.72. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.